This video is for those who want to make short-term profits, short-term crypto trades, daily trading. You know, over the past few weeks, over the past few months, the market has been kind of volatile. So I want to get back to the basics. One indicator I like very much is the volume indicator. And today I want to speak about the relation between price and volume, how to trade it. It's a really simple yet powerful crypto indicator, and I've been tweaking it to create a clear, effective daily trading signal. And this strategy is really perfect for folks who are just getting into crypto and who love to get short-term action. In the last 3 months only, this approach made me over 32k. The max I made was like 6k in one day, nearly 6k in one day. 6k, 32k, it's not a lot. It might not sound huge compared to my other transactions, you know, that I do for my long-term wallets, but it keeps me busy and it's fun to do. There is some addiction. I think I'm an addict. Yeah, beware of that. That's not financial advice, and sometimes it feels like gambling, so beware. But I still think that for someone who is new to crypto, this kind of trading process is super valuable and worth sharing to understand the relation between indicators and trading, you know, real-world trading, to get used to have a process and how to use it. When should you buy? When should you sell? Or clear your positions with one indicator or another. So for all of that, I want to speak about that today, and I've got you all covered regarding all of that. It's like learning math. You don't just want the answer. You need the steps to get there. Otherwise, you can just go do some copy trading. So no, you want to know the process. You want to know the steps to get there to be profitable. So in today's video, I'll break it all down step by step, and later I will share the answer, you know, my strategy. In this video, I will give you the basics, and on my Telegram, I will give you the advanced strategy. It's free. You just have to shoot me a message on Telegram, tell me I want to get the PDF file, and I'll send it to you, and that's done. It's not a group. It's just my personal Telegram. It's in the link in the description. And even if you have any questions about crypto trading, Bitcoin decentralization, we love decentralization, just shoot me a message. So the link is in the description. Once again, let's get back to the main subject. First, I want to give you a sense of the advanced stuff. So let's dive in. First up, volume-price relationship work in any market, bull or bear market, it doesn't matter. The volume shows you how much money is moving around, reflecting market activity. So price shows how the market reacts to that money, revealing the trend. It's the most straightforward data, the most straightforward indicator to watch, especially for beginners. So this trading strategy hinges on understanding volume price dynamics. And so what's the concept here? How does it work? The volume, for me, is equal to market disagreement. When volume spikes, it means buyers and sellers are clashing hard. Lots of folks want to sell, but lots of folks want to buy too, because they don't agree. They don't agree about what? About the current price level. Some think that it's overpriced, so they want to sell. Some think that it's too cheap, so they want to buy, and we get volume. If we have a low volume, it signals agreement. The people holding the coins think that the price is fair. It's okay. So put simply, no disagreement, no volume, no trades. Market swings come from this tug-of-war between disagreement and consensus. Tracking volume changes can clue you in on where the market is headed next. So to help you get this, I'm sharing 4 classic volume price patterns. These will guide you to nail your buy and sell timing in any market phase. So the first pattern, I will show you that on my computer here. The first pattern here is price up, volume up. When price and volume climb, it's like a heated tug-of-war, as I was saying. This kind of rally burns a lot of fuel though. Market liquidity only goes so far. So unless fresh cash flows in, which is rare, the rally might stall if volume can't keep up. So watch out. When volume shrinks, it could mean the trend is about to flip. Adjust your positions to dodge, you know, the dip when you can see this decrease in volume. Second pattern here, price up, volume down. A low fuel rally like this shows buyers and sellers mostly agree. This kind of uptrend is more likely to keep rolling. So just stick with the trend and hold tight unless you see a big volume spike, signaling what? A shift, once again. Third pattern here, price down, volume up. I think you are starting to get it, but when prices tank and volume explodes, emotions are running wild. Panic is kicking in, but this kind of drop burns out fast though. Once volume dries up and prices start ticking up, the fall's likely near its end. So just stay cool and wait for the rebound signal. And quick side note, some folks just stare at price and panic sell without checking volume. I used to do that years ago. It's a big mistake. One time I lost over, 6 figures, 7 figures, because I was cutting losses too soon because I couldn't handle the risk. Now I just stay calm in these moments and check the volume. But yeah, you might wonder, what if I don't sell and get stuck? Yes, that can happen too. It's another lesson I've learned the hard way. I've made plenty of mistakes over the years, which is why I always stress this. Don't trade on emotions. Stick to objective data like volume, indicators. It's not perfect. Data can be fudged or misfire, but it's way smarter than gut feelings and emotions. Alright, pattern 4. Price down, volume down. So when price and volume both drop, it's a clear sign the market is betting prices will keep falling. Some folks might want to scoop up a bargain here, but I say hold off. Wait for a clear shift in market mood, a sudden change signal before jumping in. And here is the quick takeaway. For rallies, watch for shrinking volumes. For dips, look at spiking volume. Low fuel rallies last longer, and heavy selling might mean a bottom's close. Also, keep an eye on breakout signals. Big volume swings often hint at a market shift. String these patterns together and you've got X-ray vision for market emotions. Because this price action, it's the people emotions. We are looking at the big picture. Take a bull market start, for example. While things are still shaky, smart money creeps in, building positions. Volume gently grows, often showing steady trading or slight upticks. And as the uptrend kicks in, buyers and sellers split, some cash out, others double down for bigger gains. Volume keeps climbing, fueling a strong rally. But near the top, things get intense. Volume spikes hard sometimes, but prices stall or slip. That's your warning to watch for a peak. Let's have a look at what happened in late October for Bitcoin. Volume started growing with small prices bumps. It was the early stage here. And mid-November, the uptrend hit with buyers and sellers splitting. But early December, what can you see here? Volume went wild near the top. The price wasn't fair for a lot. It was overpriced. So a lot of people sold. It's just a transcription of market emotions. I like this indicator. And in a bear market, it's the same. Shrinking volume with falling prices shows everyone quietly agreeing. Prices will stay low. Then, one day, bam! Volume surges like a shot of adrenaline. People think, okay, that's enough. I think this asset is worth more. I want to buy here. And we get a spike in volume again, setting up the next move. Alright, enough theory. Here is the payoff for this video. I'm sharing the exact trading signals tied to different volume price patterns. You can screenshot this and save it. These signals make decisions easier. Once again, don't trade on emotions. Whether you are a newbie or a pro, you just need to have a plan and respect it. So first signal, flat volume, flat price. Just sit tight and wait and watch. Then rising volume, but flat price. This screams reversal soon. Get ready. Rising volume, rising price. That's a buy signal. Go for it. 4. Flat volume, rising price. Keep buying. The trend is solid. Falling volume, rising price. Heads up. Be cautious. The trend might weaken. Then 6. Falling volume, falling price. Sell now. It's heading lower. Or short it. 7. Flat volume, falling price. Keep selling. The drop's not done. And 8. Rising volume but falling price. This could be a bottom. Full position time. Alright, that's today's video. Memorize these signals, understand this concept, and you'll navigate markets like a breeze. Whatever your level, new or seasoned player, volume-price relationship will level up your crypto game, your trading game. I've also an advanced mind map, as I was saying, breaking this down ever further. If you want it, add me on Telegram and I'll send it over. Just ask for it and I'll send it, and that's all. Volume price is your telescope, spotting what's next. Thanks for watching, hit subscribe for more, and I'll catch you in the next video. Merci et au revoir.